All right, students. So, in the last class, we were talking about the points of difference between private limited company and a public limited company, right? And we covered the first 3 points of difference. So, today we'll talk about the rest of the points of difference. So, if you see point number four, transfer of shares requires consent in case of private limited company, and in case of public limited company, it's easy to transfer shares. Now, what happens in private limited company that all the shareholders they belong to the same family or friend circle. That is why they do not want any outsider to join them as a shareholder, right? So that is why when somebody wants to leave the company as a shareholder, and for that obviously the shares need to be sold, so that person has to take the consent of other existing shareholders, whether the person can sell the shares to another person or not. Okay. So if they do not agree, so there will be a problem. Then the person has to find some other person, or that person can sell it to existing shareholders as well if they are willing. So that is why it's not that easy to transfer your shares to somebody else so that you can get out of that business as a shareholder. Whereas in case of public limited company, it's easy. Why? Because in public limited company, there are all outsiders. Okay, because the shares are listed in the stock exchange and anyone can buy the shares of a public limited company. So that is why if somebody wants to leave, so that person can easily sell the shares to anyone else without taking the consent of any of the shareholders. So that's why it's easier to get out of that business as a shareholder in case of public limited company. Okay, if we see point number five, so private limited companies has a lower status compared to public limited company. And the reason is because private limited companies operate on a small scale. So you know that businesses which have branches all over the country or all over the world, obviously they have far more better reputation than other businesses, right? So think about Coca-Cola, Pepsi. So why actually they are so famous and why they have a very good reputation as well all over the world. I'm telling you, like if I talk about Coca-Cola, so obviously Coca-Cola is a market leader all over the world. Pepsi is normally more often drunk in Asian countries. So that is why. So if they private limited companies, because they cannot operate on a small scale because of limited amount of capital they have, so they have a lower reputation, and because of that, there are many effects. One, um, good workers may not like to work in that organization, and they may like to work in a business which is operating on a larger scale, such as a public limited company, right? Because normally all multinational companies, I told you earlier, businesses which operate in more than one country, right? So normally they are all such businesses, they are public limited companies. So because public limited companies can raise unlimited capital, so they expand to become multinationals as well. So now you know that what is the reputation of multinationals. Either you want to work as an employee or you want to buy something as a customer, the brand which belongs to that multinational, right? Or, for example, you are an investor who wants to invest in some of the business which can give you a good share of profit. So in three of these cases, like as an employee, as a customer, and as a potential investor, in all these three cases, reputation does count. Okay, so it's easier for public limited companies to attract good and efficient workers because they would like to work there, because good workers like to be associated with such a large business, right? Because they can tell other people as well that we work in a multinational or such a large company, right? And obviously the chances of promotion are great in case of public limited company. Okay, and in case of customer as well, customers see that if they buy the brand of that particular business, that is a public limited company, so they may get a better quality as well, because better status and better reputation create a good image as well in the mind of the customers. So it's easier to attract such people as well. And similarly, investors would like to invest in such a company as well because better reputation means that the business is less likely to become a failure, okay, or to get failed. So again, it's easier to attract investors as well. Then point number six, able to achieve economies of scale to some extent, whereas in public limited company, they are able to achieve economies of scale to a very high level. And again, for the same reason, because private limited companies they operate on a small scale compared to public limited companies. Their scale might be relatively large compared to partnership or sole trader, but compared to public limited companies, they operate on a smaller scale. That is why they are not able to achieve economy of scale to that level, which is achieved by public limited companies. For example, because we have not discussed the different types of economy of scale which are available to businesses, because we are yet to cover that topic in the coming chapter. So, but we can talk about it that yes, private limited companies can buy in bulk and they can get discount from the supplier. But public limited companies can get the discount even higher than private limited companies because they have a capacity to buy in huge quantity. So that is why the supplier they offer discount on the basis of the number of goods they buy from the supplier. Okay, so obviously then public owned companies are able to reduce their average cost because they are getting the goods at a very low cost. So it helps to increase their profit as well because when the gap between price and cost increases, obviously the profit earned by the business also increases. Then we have cannot advertise their shares in case of a private limited company, point number seven, and can advertise their shares. Again, remember, it's not about advertisement of products because both the companies can advertise their products. There is no restriction. In fact, um, all businesses can advertise their products, you know that. But they cannot advertise their shares. It means that they cannot tell outside world that they are actually offering shares for sale in case of private limited company, and they have to use their own connections such as family, friends, right? In case of public owned company, because they sell their shares in the stock exchange, so there is general public there. So anyone can buy their shares and their shares are listed on the stock exchange. So that is why, because it is visible to everybody and they can advertise their shares as well. So in case of public owned company, they are more likely to raise capital that is quicker than private limited company. So again, that is an advantage as well in case of a public limited company over private limited company. All right. So that is all as far as the points of difference are concerned. Now we can talk about um, yeah, the advantages of private limited company, right? So we'll discuss that now. Okay, let's discuss the first one, limited liability. So you know that it's very easy. We have discussed that in case of limited companies, either it is public or private, that is the advantage which is enjoyed by shareholders. In case of loss or in case of any liability which a business is supposed to pay, owners are not responsible for it because there is a separate legal entity. You know that business has their own share of loss and profit, and they have their own assets. You know that vehicles can be bought in the name of the company. Why? Because company has their own legal existence. So that is why the shareholders they only pay their share of loss, and the maximum amount they can lose, that is amount which they have invested in the business. For example, they have invested 10 lakh rupees. So at the maximum they can lose 10 lakh. If the loss is bigger than that, so their personal bank balance, their personal property, it won't be utilized or sold to recover that loss. Now it is the responsibility of the business to pay it, right? So that is why that is actually the benefit to the shareholders. Then we have large capital. So yes, private owned companies has a large capital, but now you have to compare it with the businesses which have a smaller capital than that. So we can compare it with sole trader or partnership. That because there are more owners there, so private owned company is more likely to generate greater capital than sole trader because there is only one owner. So obviously, one owner has a limited capacity to raise capital for the business. So again, the point number three, easier to raise finance. Again, now it's somewhat different from the large capital because now if you want to raise finance, the option of issue of shares is there in case of private limited company, and that option is not available in case of sole trader or partnership. So by issuing shares, finance can be raised. Okay, and secondly, private limited company has a better status and reputation compared to partnership and sole trader, right? So that is why it's easier to borrow money from the bank, relatively easier than sole trader and partnership, because banks feel that the private limited company is in a better position compared to sole trader or partnership to pay back the amount of loan. That is why they are able to get get the required amount of finance from the bank as well. So you can write this explanation in this point. Then point number four, original owners can keep control of the business as long as fewer shares are issued. We discussed that as well, right? And we discussed in detail that original owners are the people who actually start the business, right? So they have the control as well. Okay, so they become the board of directors as well. I told you that they keep the majority of the shares with themselves, and in the annual general meeting, they actually vote in favor of themselves to become the board of directors as well. And because they have the majority shares, that is why nobody can stop them from becoming board of directors. So in that way, they do not lose the control. So they are the owners and they are the board of directors as well. But as long as they issue fewer shares, if they keep on issuing more shares and they do not buy those shares and someone else buys it, then there might be a problem that they may not remain the majority shareholder. And in the annual general meeting, the original owner can be voted out by the rest of the shareholders. Okay. Then we have another advantage, incorporated business. Again, it is linked with point number one, but both can be explained in a different way. Remember, incorporated business, we discussed that business and the owner are different. Both have a separate legal existence. Both have their own share of profit, loss, and they have their own assets and liabilities, right? So you can say now, how can we develop it as an advantage in corporate business? Because we do not need to just explain that time. We have to convert it into an advantage. We'll say that it has a long life. If someone dies, let's say one of the owner dies, still it will not affect the continuity of the business. Business will keep on running in the same way, right? So that is the biggest advantage of a private limited company, and this is because of the characteristic of incorporated business. So do not mix limited liability and incorporated business. Both are different. Yes, you can say because of incorporated business, shareholders have limited liability. Yeah, you can say that, but you cannot say that incorporated business means limited liability, right? Similarly, you can say the shareholders have limited liability because of the characteristic of incorporated business. Yes, this is possible, but you cannot say that both are exactly the same. All right, now let's move on to disadvantages of private limited company as well. So legal requirement, there are uh, some documents, legal documents, which need to be submitted to the registrar to get the name of the company registered, right? And we'll talk about those documents in the lessons to come. But right now, I'm not going to name them, but you just can think of that, okay, there are certain documents which are required to be submitted, right? So it means that there is a delay to start a business compared to sole trader and partnership. And you can imagine that why it is a disadvantage, but again, there's a delay, so we have to convert it into a disadvantage, right? So how can you do it? You'll say that obviously, you know that when you start your business, you have to spend money and you want to start your business activity as early as possible, right? So that cash starts coming into your business in the form of sales, right? But because there is a delay because of those legal requirements, so obviously the business has to spend money or business has to survive without getting money for relatively a long time period compared to partnership and sole trader, and it's not that easy, right? So owners cannot get the return quickly compared to the other forms of business such as sole trader and partnership. Then we have cannot sell shares in the stock exchange. Again, a disadvantage because you cannot raise capital quickly, because you have to find what you have to find the people who are interested in buying the shares of your company. And for that, what do? Obviously, you have your own connections. You ask your family, friends, okay, or through your family and friends, you tell it to, you contact the outsiders as well. But again, for that, you need to have a strong connection with your family members, cousins, and other relatives and friends as well. So it takes time. Then we have shares cannot be transferred easily. Again, we discussed that. So you have to take the consent of the existing shareholders. So that is a disadvantage for the shareholders. We have talked about it. Lack of secrecy, again, yes, that is quite a big disadvantage, because now there are more shareholders. So that means that the important information of the company, let's say financial information and operational information, can be leaked out, because now in the annual general meeting, the board of directors have to inform the shareholders about how the business is progressing, because that is their responsibility. And secondly, they need to publish it in the newspaper as well. Okay, so even if they do not publish it in the newspaper, still because there are more shareholders, so it is highly likely that the information will be leaked out, right? And imagine that, for example, if business is struggling as far as finance is concerned, or business is facing financial crisis for some time period, so what happens actually? That information, if it is leaked out, so there is a very bad impression in the market. The customers may not like to buy because they think that the business is in financial crisis, so quality may not be good. Investors would not like to buy shares of that company if they had the intention to buy it earlier. Again, workers would not like to work there. Maybe if some workers were planning to work over there, so it would be difficult to attract good workers, because they may feel that the business may close down in the future. So their job is at stake. That is why. So that is why the lack of secrecy is one of the biggest disadvantages of private limited company. It is in the case of public limited company as well. Then we have limited capital. So yes, now we'll, you know that in advantages we discussed that it has a large capital, but we compare it there with the sole trader and partnership. Here we are comparing, because now we are making it a disadvantage. So we'll compare the capital of private limited company with public limited company, because it has a far more capital than private limited companies, because they have unlimited number of shareholders. So you can just develop your point in that way. Then, okay, now we can talk about advantages of public limited company. So limited liability is the same as private limited company. I'm not going to explain that. Very large capital. Now it's not large, very large. Why? Because the number of shareholders are unlimited. And you can definitely talk about other forms of business. It can be private limited company, sole trader, partnership, because it has the far more capital than other forms of businesses. So you can develop the point in that way as well. And because of that capital, they are able to achieve economies of scale as well. You know that. Better status and reputation being a large business. Again, we discussed that in detail, that because of large in size, they have far more better reputation, and that is why they are able to attract good workers, investors, and what else? The last thing, customers, right? So we discussed that earlier. Easier to raise finance. Again, there are many reasons. One is they can issue shares, unlimited shares, and because they can sell their shares through the stock exchange, so they are able to generate a fairly large amount of capital relatively quicker than a private limited company, right? And another thing, you can develop the point that way as well, that it is easier to borrow money from the bank, because banks are not hesitant in lending money to a public limited company. Think about, if I go to the bank as a manager of Pepsi. So obviously, bank manager will say, okay, you are most welcome, because they know it's a big company and they will have plenty of security to offer as well. And they cannot run away because they have branches all over the world, right? Or all over the country. So when this happens, there is another advantage, and that is they charge a lower interest rate. Why? Because I told you that banks normally charge a higher interest rate from those businesses where it is risky to lend money. So what do? They increase the rate of interest so that they can recover the amount with the help of interest rate quickly, right? But when the risk is on the very low side, especially in case of public owned companies, so they charge a lower interest rate because they know that they will get their amount back easily. So there is no risk involved or very low risk there, so right? So low interest rate is charged, so interest is an expense. So when it will be low, obviously it will increase the amount of profit. Then we have incorporated business again. We discussed that in private limited company as well. So separate legal existence or identity. I'm not going to talk about it. Then cost advantage. Again, that is economies of scale, and we discussed that as well. That public owned company achieves high level of economies of scale. They are able to reduce their cost to a very low level because they operate on a large scale, so they can buy in huge quantity. And according to their quantity demanded, the supplier usually gives them a very large discount as well. So that is how they're able to earn higher profit as well, because when cost will go down, obviously they will earn more profit. Shares are sold quickly again because they are able to sell their shares through stock exchange, and they are able to advertise their shares. That is why it's easier to raise finance quickly when they need it. Then shares can be advertised. Again, we discussed that, so I'm not going to discuss it. You can link the last 2 points together if you want to develop it well. It's up to you, or you can keep them separate, or you can explain them in a separate as separate points as well. Ease of transferring shares, I told you, no consent of the existing shareholders is required at all. So shareholders can easily sell their shares and can get out of the business as a shareholder, right? So that is it. So thank you very much. I'll see you in the next class.